All right. How's everybody doing today? This is Eric here with Investor Central Club's Stacks and Stacks AI. Back here today with your Closing Bell show. I know we're doing this a little bit earlier than usual, but it is Wednesday, July the 16th, and we're going to get into it. We've got a very exciting month of earnings to go over. We've got some plays over the course of the last few weeks that we need to discuss. And I also wanted to talk a little bit about our software. I had a couple people that were mentioning how they weren't quite sure how to navigate some things. And I also wanted to go over some Stacks AI and a little bit of a, not just how to, but, kind of open up your eyes a little bit more as to how to use our software and how to use our Stacks AI to profit from. So without further ado, let's jump straight into it. Let's take a look over at our Stacks platform so far. As of today, you can see it is Wednesday, so our flow scanner is going to already have things from earlier in the week. But we can see NVIDIA's been a bit more bullish than bearish. Of course, we've seen it make new all-time highs of this week. You see a lot of hedging though. SPY, IWM, and QQQ all have quite bearish flow, but that's, like I've said, that's fairly expected when you come to these all-time highs. You see people expecting that, there may be a pullback, or there's a little bit more fear of the fact that, it's gonna drop from those all-time highs. So until it's able to fully break out and clear that range, you'll definitely see some more puts than calls in those indices. Tesla fairly even, 17 to 16 mil. AMD slightly bullish, almost a 2-to-1 ratio. Silver a little bit more bullish, 11 mil to 6 mil. GLD gold very, very bullish, 14 mil to 2 mil. I will point out too, there is again quite a bit of talk of how we're gonna have to print more money to get ourselves out of the get us out of the debt spiral that we're in. And that's why you can see that these types of things, gold, silver, you've also probably noticed Bitcoin starting to go toward highs, because again, those are hedges against that type of inflation. Meta, very, very bullish, 14 mil to 1 mil. But again, I will say, when it comes down to some of these top huge companies that we do have, look for larger numbers. 14 mil, it is bullish when it comes down to what we see for this week, but that's not exactly, until we see 100 mil plus, that's still just fairly slight compared to what we've seen before. iBit, Bitcoin, Palantir, Google, all of these are quite bullish as well, but again, smaller amounts compared to what we've seen before. MicroStrategy as well, Coinbase, same thing. Microsoft. So you can see tech's getting a lot of money flow into it. Same with Apple down here, 2-to-1 ratio. SMH, interesting, seeing semiconductors on a little bit more of a bearish side of it, but that may be linked again due to how we see NVIDIA going toward those all-time highs, maybe a hedge toward that downside that may come. Robinhood, 7 mil to 2 mil. Circle, 8 mil to 1.5. Alibaba 6 to 3. HIMS very bullish, or sorry, HIMS is very bearish here, 9 mil to the 0. So we'll take a look at those as well. SMCI, Amazon, etc. Another quick thing, I was talking to our developer about this, just so you guys understand. If you guys go into here and you filter for the date, let's say for example I click on Monday and I hit apply, you have to realize that it gives us the range from that Monday, the 14th, till today, okay? I can also click on it where I give a whole range and click it that way, so I can go through and click a range from previous months or previous weeks in doing so. So the 7th to the 11th, I can see that is filtered for up here. But if you just click a single date, so if I click just the 7th, it's gonna give me everything from that day. Now, if you just want a single day, you want to hit equals, see what's going on for today in particular, then you can see as well. So SPY, QQQ, Tesla, IWM, all more bearish than bullish, and you can see the filter for here. So gold here had one print for 13 mil that came in, and you can always click on that common contract that shows up on the side, and you can go and see exactly what it is that they purchased here. So the expiration for next month, 300 strike, quite a bit. There are buys and sells in both of these here. And again, just a quick way for you to see what's going on in those indices and in our stock tickers. Quick reset, that way we got to see what's happening here. And a little quick thing as well, we will have WaveX coming up. Right now our scheduled date is for later in the year, September or October right now. We'll give you guys more details of it, but we've been developing additional tools to help you guys out with understanding how the markets are moving and how to give you guys additional edge when it comes down to finding good plays and finding good options to get into. So keep that an eye out for those. If you happen to have your own Discord or happen to have quite a bit of a following on social media, let us know. We can look into getting you guys access to some of our tools if you guys can help us out with letting people know what's going on with Investor Central Club. All right. We're going into the last hour before market close. You can see already we've had some Tesla buys come in, some more silver. I like to filter for the buys just to see what exactly is going on. Some Marvel, TLT puts, NVIDIA, ETHA, etc. Another thing I want to do, let me move my screen over here. I just want to go over what's in our Discord channels, because I think a lot of people, when you first do pull this up, you will immediately see our main chat. Give it a second, it's loading right now. Might have to reopen this. Sometimes what I've noticed as well is sometimes if there is an issue with it, just go ahead and reload. So I can go in here and I can go reload stocks real quick. Let me close the window and reopen it. Same thing that happens if you're on the mobile version as well. Sometimes you'll have to close the app if you're experiencing anything slow, anything that isn't linking, reopen it. We're trying to figure out what it is that's causing those, but if you do happen to see that happen, don't hesitate to let us know in the Stacks channels with our Stacks support, or you can always email us over at help@investorcentralclub.com if it's not loading like this. Let me give me a quick second. I'm just going to turn on, I'm going to close my, let's reopen it. Very interesting how it's not working. Didn't know that was happening. It was working earlier today. We'll come back to this in a moment then. I'll double check on that in a sec. All right. What I wanted to go over today for us was earnings. We've got quite a bit of earnings coming up. We've already discussed a little bit about it. So for example, the rest of this week, we already did see earlier in the week, we saw JP Morgan, Citibank. We had ASML earlier today, Bank of America. So we have a lot of bank earnings coming up this week. So far, JP Morgan had a bit of a bump up and then came back down. Citibank went up. Let's go into that as well. So let's go JP Morgan. We had noticed this big flag that was forming on JP Morgan. Closer. Had this flag that was forming in JP Morgan. As you can see, earnings came out. It was positive, popped up a bit, came back down, came back into this flag, and right now it's traded a little bit further down below it so far. So you can see they took the liquidity up here. Technically, those that were answering our video or our poll that we had on Instagram said they thought it was going to go up. There was a few that said it was going to go down. Technically, you're both right. Popped up, didn't last very long, came right back down. But what's interesting to understand is that they did have quite a bit of a surprise when it comes to their earnings, 16% higher than expected. Revenue came in at 1.1 bill, higher than expected as well. But again, remember that with earnings, that's not always everything. Sometimes it'll pop up and come right back down due to the way that they give the forward guidance. All right. So there were some downgrades that were happening, etc., that caused the price to come back down. Citibank also, Citibank had a big pop up, came back down just a little bit as well. Let's turn our attention over here too. Unity, I had this posted in our chat or if you're in our Discord, I've also shared it on Instagram as well, where we expected Unity to move in terms of a Wyckoff accumulation pattern. So let me pull this out for you guys to see. On the daily, on the weekly as well, there is this big pattern that has been appearing for our what's considered a Wyckoff accumulation pattern of Unity. And as you can see, we broke out of this pattern. I'll redraw the line right here for you guys. Basically, if you go off of the green and not the light blue that I've drawn over here, the green side of it is basically we've broken up. We're at this LPS and we're started to head back up. So I do believe that we might see a sign of strength very soon with this headed up further. We still got to break up above that 35 range. We're just right above 34 at this point. But if you guys were able to, we saw quite a few prints for this come in. Let me switch over to Discord. Why is it not showing? So if you're on Discord and you are following me, I did have a Wyckoff accumulation pattern show up just a bit ago, right before we've already seen the spring. We're headed up further here. This was when it was trading back at about $30. And another thing as well is that we did notice I have to go back a little bit more. Let me see. Oh, right here. We notice all these buys for unusual for the beginning of next year, January 2026, and some short term as well. So for the 18th, which would be this Friday. But they got into these on the 8th. A lot of unusual came in right away, and I let us know that that's, I'm going to be looking into getting into those positions. As of right now, the entry for the 47 and the 65 are both up about 30% from those entries. If you got in or averaged down when it dropped a little bit, dropped about 15 to 20% on each of those, you may be looking at closer to 50% or more of a uptick from those lows. But we saw another 14% move just today for Unity. And we're looking, I do believe there's still maybe a little bit more of a move to come before a little bit of a pullback. If I'm looking over at this chart right now, I would say that the $35 range is where we've seen the previous resistance. Getting up and through that is going to take some of a push. And then we're looking at the $39 to $40 range before we hit that $42 range. So there is quite a bit of room to go upwards, but I would not be surprised to see a little bit of chop around here. But keep in mind that we do have for January of 2026. So there is some time for those. But again, if you're in a position where your hands are starting to sweat, if you're uncomfortable with those, I would take those profits just to secure some of those gains at this point if I were you. All right. Back to earnings. I'm gonna put my face back on here. Give me one sec. Back to earnings. We saw ASML. I want to talk about this. ASML, the overall stacks was showing a little bit more of a bullish side to, but I want you to make sure that you guys understand this. You always want to take a look as to the dates as to when they've been getting in. So for example, you can see these spot prices here where back in April when it dropped to $676, or even back in April when it dropped to $623, they purchased these calls, and yes, it went back up towards $777. That's how you can use a spot price here. Get an idea of how it's moving over time. Now, while it shows, and while if I filtered for buys, you can technically ignore this 716. That's today after earnings have come out. But it shows a lot of big money all for some time, the last few months before. So you have to keep in mind, as price continues to move, these guys are probably already in the money or already made some profit off of it. You don't want to necessarily use extremely old data to judge whether or not the earnings expectation with stacks is up or down. So in this case, yes, they've spent quite a bit of money. They've already made some money off of it. What I would do is pull up these specific tickers, pull up these specific options, and double check to see if there's a possibility they're still in those exact positions. Now, what happened with ASML? ASML reported that the tariffs were starting to take effect. Let me pull up the chart. Tariffs are starting to take effect. They also discussed about how their forward guidance, they did not give forward guidance for 2026 because of those types of uncertainties. Okay, so as a result, yeah, we do have an earnings beat over here, and actually a pretty solid earnings beat. Earnings up 12%, and then the revenue up 1.6. That's fairly in line. But it's always going to be about what they have to say about the upcoming future. And in this situation, they were very uncertain as to what's going on in the future, so they did not give forward guidance, and that's why you see the stock price drop. If they were able to give forward guidance and they expect to make more money, things like that, then I would have expected this to pop up a little bit higher. For some of you guys that understand or follow ICT rules, there was a little bit of a hint. So when you see these big movements, these big drops, and also these big gaps as well, there is a theory that liquidity exists in there, and they say gaps eventually get filled, but ICT also teaches that they're going to go back for that before they drop, before they head it in the other direction. Keep in mind that's a very general explanation of their techniques and what they do, but that is something that I've noticed as well. Is you'll see big drops, you'll see how that shows an imbalance of liquidity, and what happens is price goes back to take the last of that liquidity before it moves in the other direction. And that's a little bit of what happened too. We peaked up into the top of this big bar, and then we've seen that drop. There is this thing called the Lux Algo fair value gap. That's what it's called, the fair value gap. And what it does is it draws out, so you can kind of see where my blue boxes are, aligned basically with where those red ones are as well, right? And what they usually show is that price will return to those positions, return to those areas before it heads in the other direction. But again, I feel like I'm butchering the explanation here. I'm not the best and most well-versed in ICT, but it is one of the more common techniques and theories that's passed around, especially on social media. And I do find that there's a little bit of validity to it. So it's something that if you are interested, they've got their courses online and things like that on YouTube, a lot of free stuff for you to take a look at, and understand that their price does oftentimes go through those zones. The only thing that I always warn you guys about, especially with options trading, is it's hard to time those things. So for example, yes, this dropped here and you do expect it to come back into that zone, but you have to remember in this situation, it took 276 days for that to come back into that range. So if you were in calls, you very likely could have gotten stopped out or could have ended up in a situation where you're very, very red before it comes back. So, you know, just knowing where price is aiming to go for options trading isn't always going to be the only strategy that you want to focus on. So just keep that in mind. Okay. Let's go back into earnings. I need to pull this up for myself. That image is a little small. Let's go back into earnings. And let's see. Bank of America, Goldman Sachs, Morgan Stanley, those also reported. We've got United Airlines coming in after. Let me go over what's coming up tonight and tomorrow morning. We've got some big ones. Let's see if we can find any plays for those before close. And then we'll go review some of the previous things as well. So, first one I want to go into will be United Airlines. United Airlines had some, we've played this before and had some pretty awesome profits from it. The most recent things we see, so we see a sell of these calls. So that might be putting, well, technically that's in the money. Puts being purchased. I like to filter for the buys to see if there's anything that I see. Went from 90 plus, it's dropped back down just a little bit. Okay, now I want to point out that last week we did have Delta Airlines. Delta Airlines reported, let's pull that up. Delta Airlines reported, and as a result it pushed a lot of prices up for airlines. So you can see Delta Airlines was in this flag pattern, reported positive earnings. In this situation, actually, Delta Airlines actually gave forward guidance, and it gave decent forward guidance for the next year. And so as a result, you can see that it popped up. And here you can see the red box right here shows where liquidity was, and you can see how it basically went and it popped into that zone. They like to say about the 50% mark through that zone is the first target. Already popped up in there, came back down, created another fair value gap below. And so there's a possibility what we might see with this moving forward is that we might see this come back down toward this. First, we're probably going to bounce off the bottom first, come back up, and I do think we might head further up from there. So Delta Airlines in this situation. Now notice this, United Airlines, same idea. Delta Airlines reported back here, and as a result, the rest of our airlines all decided, all popped along with it, because if one airline does things, the entire sector starts to act in very similar fashion. And so we already saw it pop up. It's already come back down a little bit. So there is a possibility with, I would say, United Airlines. Stacks doesn't have too much data on it right now. Like you can see, Stacks, the one thing, yes, yesterday we saw some puts, but that 96,000, not even 900, 96,000 in premium is extremely small. This one though right here might be a bit of an earnings play. Let's go ahead and pull this one up. Actually, I'm going to pull it up on Webull. Came in on the 10th, so 6 days ago. Expiration for Friday, the $90 strike. 2,000 of those options being taken out. So let's do that real quick. Let's jump into Webull. I'm going to pull up United Airlines. So for this Friday, the 18th, we're looking at, let me double check again, they said the $90 strike. Okay, so $90 strike. Right here we can see open interest volume. Okay, so there were about 2,000 of these traded today. Let's double check real quick, and we're going to view this chart and just double check. We're going to look back on the 10th, which is when this info came in. Okay, so here, this is my analysis of this. Says they're already out. They already took the pop. Okay, so they played the Delta earnings. You see that big green bar down here? And you can also see on the top up here, it says volume. Volume 3,854. Over here, volume 3,831. So they very likely played from here to here, and that position is already out. Okay, that's how I would read this chart down here. And they made a nice little profit too. So let's say if they got in at, what'd they say? Got in at 585. There we go, 585. They got out here. Maybe not too high up, but what, 595, etc. So I feel like they probably made a little bit more than that. Let me double check. Yeah, 585. Huh? They got it at a pricey premium. So again, that's why you want to be able to use, pull up your flow, pull up your charts. One thing to also be aware of and careful with right here, I've talked about this plenty of times, is look at this implied volatility. So just for Friday, the IV for a lot of these is all past 100%. That, while it does mean, and if we do see big money purchasing into it, that does mean that they do expect it to move. The high IV is something that, especially if you are a newer trader, that I would stay away from. IV, for just a quick little example, I've talked about it over and over, is IV is an expectation of the average movement in either direction. So in this situation, let's just say, find a round number, it's just $5 right here. $5, 100%, 118% IV does mean that it could very likely double, and that would be normal, but it could also go down to 0, and that would also be a normal movement for this. And that tends to happen when it comes down to earnings and earnings season. You'll tend to see the more, the hotter stocks, the ones that everybody's talking about and expecting earnings to come from. Those are the ones that you're going to see higher IV, generally, if close to 100, if not over 100%. So keep that in mind, okay, guys? Let's go back. Next earnings I want to look at. The rest of the ones later today. There is AA for Alcoa. Let's peek at it. Sometimes see some stuff, just calls being sold. Nothing too recent with it. This one might be a bit of an earnings play. Let's double check as to what's going on in that there. Some price targets saying what, 37, 38. Earnings. It's always good to take and peek back at the earnings and the history of earnings. So for example, you guys can see right here, it's a mixed bag. Some wins, some misses overall. So again, there are some companies where you see where they always beat earnings. In this situation, it's mixed. Big picture, it's hard to tell. Is this a big flag? Is it a falling wedge type of pattern? This big peak up to the top. So not the prettiest pattern to look at, and on the smaller scale of things here too. Stacks does not give me any sort of extreme side to take on it, so I don't necessarily have anything to say in terms of what direction I expect Alcoa to go. If I were to give you guys some levels to think about though, we break down below $28, it's going to come back down toward the 26. If we're able to break, I mean, it's already come down quite a bit the last few days, before earnings. So that sometimes actually makes me think that there might be some upward movement after this report, because in certain situations, if it's sold off before earnings, then a slight beat or slightly better numbers on the report tend to push it up a bit more. If you see it in a situation where prices run up like crazy, so for example, like we were talking about United Airlines, prices run up quite a bit. So ultimately the numbers need to be extremely, much greater, if anything, or need to have some great guidance moving forward, because otherwise it's already been a bit priced in. So like we said, what's happened so far is that Delta Airlines has already given great or better guidance for the upcoming year, and as a result, United Airlines has taken a bit of that movement with them as well. So unless the numbers are a lot better, you very likely either are going to see two things. You're going to see United Airlines just kind of chop around in this area between the high and the low of where that big candle was right here. So we haven't really broken up or down from there. If there is any sort of miss and it's not as great as what Delta Airlines was saying, you're going to see it come back and fill this gap and then decide from there. Quick thing too though, but this is from before. You can see here where this is the Stacks AI print for United Airlines, and I just want you guys to see this because this has a bit to do with Unity that we had talked about. This big blue box is the Wyckoff accumulation chart with the sell-off, the reaction, and things like that. So if I were to say Unity is probably in this area right now, where maybe we'll see the pop up and come back down for another last point of supply, or it's possible we're starting to break out in this area and Unity could head up further. And what was pretty crazy about this is Stacks AI got us in this area. We took profits as it popped up. There was no guarantee it was going to go all the way up here, but as you can see, had about over 100% return from that entry on just the equity. So you can imagine something like options, how crazy that may have gotten. If you guys are here with me, I know I usually ask you guys comment stacks for me, so I know you're here. Let me know if there's anything in particular you'd like me to go over. I do have the chat open on the side just so that I can monitor it and talk to you guys a little bit on the side too. So have a bit of a conversation. Let me know what's going on with you guys. Any positions you're in that you want me to look over, any sort of earnings you're looking at that you see on stacks, or you've seen any sort of you've seen anything, social media, Twitter, Instagram, have you seen anything that's interesting for us to take a look at? Next one I want to talk about here, let's just go right into tomorrow, Thursday morning. The big one that everybody's going to be waiting for is TSMC. So Taiwan Semiconductor. Let's go into it. So TSMC, let me pull that up. Johan, I'll get into yours right after we do this. But yeah, thank you for your comments. I'm definitely going to get into that in a bit. TSM. Sorry, not TSMC. TSM is the ticker, but TSMC is the company name. We are approaching all-time highs at this point, 238. So overall, the risk is definitely to the downside. That's the first thing you're going to have to notice. Look at this run up. Since the tariff news till now, it's up 75%, right? This basically we've already had our crash of 2025 when you consider it, okay? It dropped from 40% and it's back up 75% from there, all right? Now, what do we need to understand? Well, first off is we just recently did have news about how NVIDIA is being allowed to sell their H20 chips to China, okay? So that's one of the big things that popped a lot of semiconductor news. TSM, if you guys aren't familiar, is a foundry. It's the place where all the chips are actually being made. These machines are extremely expensive to make and to have. And what happens is a lot of chips are designed by certain companies, like Nvidia is going to design their companies, and they got to go and actually ask companies like TSM to actually build it for them. So if we're able to break up above, if we see any sort of positive news, positive earnings tomorrow, I would definitely expect it to pop up and make new all-time highs. Let's see if Stacks expects anything in particular with it though. So TSM, mixed bag so far. Definitely a lot of puts is what I'm noticing here. Okay, a lot of puts that have come in, and a lot of them for short term too. A lot of them for Friday. Now the big money situations, we've got buy of calls for next month. 1 mil, 2 mil, 2 mil. But these are all from earlier in the month, and these may have very likely already profited from the recent little pop due to the Nvidia news. Okay, so again, it's trading at 237. If you were in any of these positions that profited, some of them might take some of it off the off the table just to secure some of those. If you're looking at TSM, pull up your chart, pull up these specific options, and see exactly, are they still in it? If they are, then there's a possibility they're playing for their earnings positions. Definitely a mixed bag. I definitely would say, I'm with what I see here, and even up here as well, might have to lean a little bit bearish with it. The thing to keep in mind too is looking at IV. I would be careful with these types of things, just because again, the moment IV is high with those earnings, sometimes it might be better to wait for them to report and then look for the direction afterwards. But TSMC, if they are able to report that they've done much better, or blow expectations out of the water, definitely going to see new all-time highs. If we see just in line with what expectations are, I would say with the way that Nvidia pushed semiconductors up, I would see a TSMC drop a little bit. So again, it's hard to gauge exactly what direction's going to happen with this. There is quite a bit of reports of how the tariffs are really starting to take effect in this quarter, and there have been a lot of predictions saying that Q2, Q3 of 2025 is where we're going to start to see a little bit more of the recessionary forces start to hit. So keep that in mind, okay? Back to it, let's see. What else is coming up? PepsiCo, US Bank, Abbott. Let's just peek over at those. PepsiCo. Not too much as of today, just a buy of some puts. Those, I would say, those are fairly cheap if you wanted some sort of a earnings gamble. 34 cents for those. Open interest is extremely high for that, so keep that in mind. And the most recent stuff is all bearish, so that might be worth taking a look at. All right, that might be taking a look at. PepsiCo earnings, gamble. Oh yeah, the only thing is that it is expiration is for Friday. It's got to break that $25 mark. So let's take a look at Trading View and see what that says. The only other thing is it is already pretty far down at this point, right? You already see it's already near these lows. Will it come back down? That is a possibility. We've already technically taken a bit of this halfway through the liquidity or the fair value gap of this last drop from the last earnings. Now, something interesting to consider though. Let me take my face off here so you see better. What do you guys see about earnings with Pepsi? Pepsi very rarely misses. Do you see that? So yes, the last earnings, they had a very slight miss. So my expectation is that earnings is probably going to be a beat. But what are their upcoming expectations? What are their upcoming forecasts going to look like? Thanks for all the comments, you guys, too. I'm going to get to those. Let's just put a quick review to Jenny. I just talked about TSM. TSM, in terms of it, the thing that I would be careful with is that right now we've seen quite a bit of a run-up. If you are familiar with those where you can take a spread, where you can maybe even go with a part, you know, have a leg going up and have a leg going down. The issue that I would be careful with, especially with earnings, is simply the fact that IV on both sides could very likely crush you. So if they end up with earnings that isn't too spectacular but still beats, there is a possibility that we might just drop back into this little range, this $232 range, chop around, maybe peak up overnight, take a bit of liquidity up higher. Some of the big money might sell off a little bit higher, and it's just going to drop right back down. Just be careful with that. Another thing that I would be considerate of, if you're just looking at technicals for this, you've got this huge run up and you're starting to see a little bit of divergence coming in from your RSI and your stochastics. So be aware. I love it when we're able to make a lot of money off of earnings plays, but in terms of stacks is showing a little bit more bearishness. And in terms of the run up, this is already a 75% run up from the lows of April. So you have to keep that in mind. The other side of it was the fact that Nvidia did report that they are able to sell their chips to China, those H20 chips to China. So as a result, we already saw TSMC pop the last couple days due to that. So our new all-time high is about to come. It is possible. This one is more of kind of a coin flip at this point, but Stacks is leaning a little bit more bearish, and IV is extremely high at this point, so you got to be careful with those situations. Your guess is as good as mine on TSM for this point. Comment what you guys think. I'd like to know what you guys think, though. Go ahead and let us know in the chat. US Bank, I would say, is probably the other one. There we go. US Bank, USB, let's see. Yeah, you've kind of noticed this with a lot of our bank earnings have kind of just popped and dropped. With the exception of, Citibank went up a little bit higher, but what I've always, if you have TradingView, try this out, the Lux Algo Fair Value Gap. And what it does is it draws out these ranges in which I find them to be quite interesting, because either you'll see it fill that gap, the bigger ones like this one, it filled the gap, went away, okay? On this top end, you'll see as well, dropped, filled half of that gap, came back down. In this situation so far, we came back down, hit the tip of that gap, and we've rejected it so far as of today. So one of those things to consider is these gaps and these fair value gaps that exist tend to act as a bit of resistance and support. And as you observe a little bit more, hopefully they may help you understand exactly what's going on in terms of that movement. US Bank, let's look at Stacks, see what it has to say. Just a little bit of activity today, 2 puts being bought. They sold off some puts as well. Hard to tell. We've got these 2 puts. They are fairly cheap in terms of maybe an earnings gamble if you want to go for it, but I would not jump into these necessarily. This expectation is all the way for January of 2026. So yesterday there was some rumors about Jerome Powell potentially being fired, but again, the administration does not have direct control of whether or not they can fire the head of the Fed. There has to be an investigation to prove that there's sort of wrongdoing, and as a result, that can technically happen. But then Trump did tweet again saying that there is nothing about firing the head. So we'll have to see what's going on with that. But quick review too. If we do see interest rates being lowered, it does put an upward pressure on the markets, upward pressure on asset prices, because borrowing money becomes cheaper for these banks and for these institutions. However, there is a misconception that it will drop our interest rates as consumers. That's not going to be directly correlated right away. That is still being determined by the markets. So understand that while we would love to see lower interest rates when it comes to buying houses, coming to loans, and to borrowing money, just because the Fed lowers interest rates does not directly mean that's going to happen for us right away. Now, the issue with that too is, yes, interest rates being low boosts asset prices, but boosting asset prices also creates an issue for the consumers. As consumers, that leads into extreme inflation. So far, the Fed and Jerome Powell, I understand that the administration is pointing a finger and extremely unhappy with Jerome Powell and the Fed for not lowering interest rates because they want prices and asset prices to go up. But what happens if they do drop interest rates too fast? Well, that actually happened last year, and what it did was it inflated prices a little bit more. So we need to understand that it's a very delicate balance between, stable prices and stable employment for everybody, versus, you can imagine, for the people that have a lot of money, the people that have a lot of stocks, billionaires, they want their asset prices to go up. The fact that eggs are $10 a carton isn't going to affect them as much, but they do affect you and I, the people that are actually the consumers of Main Street. So we will see what ends up happening with that. It's definitely been a lot of back and forth. If I were Jerome Powell, I understand it's probably a big headache having to worry about whether or not what's about to happen. He's himself has already said that he's not trying to step down. He's not trying to give up his position, and that and that the Federal Reserve is doing their job that they've been, contracted to do. So keep that in mind. All right. Let me see what else is coming up for tomorrow. Let me know if there's any of these you guys want me to go through. I think I'm done for what's coming up Thursday. The only other one I would say is probably Netflix for afterwards. So I'll pull that up and then I'll go through all of your guys' comments here. All right, Netflix has been doing pretty great. 1.26 in terms of where the price is at. If we take a look as to right now, I would probably be leaning more bullish. At least that's what Stacks has to say right now. The issue with it, especially for you and I, is because it trades at over $1,000 per stock share. A lot of these are going to be extremely expensive positions to take into. So for example, this one from earlier last week and this one from yesterday, expiration for Friday and expiration for next Friday. Yeah, they put in 1.6 mil, but they're spending 5K per option on those. So they're slightly in the money. So that may be a situation. Again, they've got the money to spend. While this $800, right, $8.15 for this contract for next week Friday, for the 1.4K strike price, you gotta also understand with IV is fairly high right now. IV is probably gonna get higher over the course of these days. You could lose out pretty big on this if it goes the other direction. So let's take a look at what's going on the chart. So could a drop in rates save our outstanding debt rate the government pays if they refi? Yeah, technically. So yes, the whole reason why they want the lower rates is because it's going to save us money in terms of our national debt. But you also need to realize too is we're going to continue to spend. You know, they're using it as a way to say, okay, well, you know, previous administrations are and the excessive spending that they've done is the reason why we're in this hole that we are in. And if we lower interest rates, we'll pay less. But paying less doesn't mean we're paying zero, and we're still in a deficit. So it's not necessarily it's not going to put us in a surplus and suddenly fix our national debt. It's just going to slow the burn. It's just going to slow, and it's just going to kick the can down the road even further. So that's something to consider. Netflix, I will say, looks like it's very likely going to pop after earnings, but it's one of those things where each contract for earnings is a bit too rich for my blood. We are trading at near all-time highs. We've already seen it come back a little bit. Netflix overall very recently has been doing quite well, but the only other thing is we are at this top of this channel. We hit this channel, we popped up, went up higher. Those are usually the situations where the risk is extremely high. So the drop, if it does drop, could drop quite quickly and fairly extensively. As of what Stacks has to say and on the daily chart as well, I do think that we could go up a little bit from here. We could at least come back toward that 1300 range. Fill that fair value gap that exists up there. Right, pop up past, at least come to this, what, 1263. If it's able to break up above this line, 1270, you could see it come back toward the 1300 range. Now the hard part, I will say, and this is, I'd be interested to see what exactly happens, is a lot of times you'll see it actually pop up and then it's going to come back down before market opens. So what will happen is that it will come and take liquidity. It'll come and jump up to these prices. Big money after hours still gets themselves out, and then it drops from there. So what would I do? If you are on Stacks, go back into these specific buys that they've had. Go double check your open interest, see if they're still in those positions. Double check your IV. If IV, I would say, because these are more expensive options, IV might not be as terrible. Might just be in the 50, 60, 70% range. But that still does mean, though, you have to be a bit careful with it. Like, for example, I would love to get into this one for the expiration of January 2026. They put 3 mil into it for a 1.36 strike. That's probably just the all-time highs right now. But the issue with that is that they're spending 9K on each of those options, and I'm not about to risk that on that position. Use up all the buying power I have for one option, and if it goes the wrong way, you're SOL. So keep that in mind. But Stacks overall shows Netflix quite bullish from where we're at right now, especially because all these entries are right around where we're at. So if they're still if OI is still high for all of those, I would definitely expect a bit of a pop for Netflix. Okay, let me get into all the stuff you guys were asking for here. Let's go through those one by one, and then as market closes, we'll discuss a little bit of the things and the reports that come in. Okay. Thoughts on the following tickers: Google, Carvana, ENPH, earnings next couple weeks. earn big money prints, unusual prints. So yeah, let's say for example, Google. A lot of these bigger companies, you have to remember, have great stewardship, meaning the CEO, the CFO, the people steering the ship all have not only shareholder profits in mind, but they have a great strategy and they've got a great group of people that are actually leading the company. We do see quite a bit of buying in terms of it right now. I would say even with IV a bit lower in that 30 to something range. If you're able to get in some of these positions early, that might be a good thing. Now we'll take a look at the chart too. So overall, we see, let's see, 170 something. It's up higher already. So a lot of buys for Google at this point. Let's take a look over at the chart. Oh, what do you see? My little yellow line is usually my prediction of what's about to happen. You can see I was not completely correct. It dropped a little bit more than I would have expected, but it did still head up in the direction and to where these highs are. Google overall very likely can come back toward, I would say it's probably headed back up toward this gap up here. As a company, had some periods where they miss earnings, but overall, at least most recently, done quite well. The thing that I would say for Google, let's also go into here, stacks. I do believe we saw Google, yeah, we saw some Google calls. Back in May, we saw some Google calls for 2026. It is up at this point, but we will have to see exactly, are they laying a strong foundation for what they expect to come? So Google, definitely more bullish. Carvana. Ooh, yes, we saw this earlier today. A lot of unusual buying for Carvana for the upcoming months. When do they report? Let's see. Man. So first off, I've talked about this. We have what's called a distribution phase that did happen right after COVID, and people were buying cars, and a lot of used cars went up in value, popped up high, came all the way back down. So Carvana went down to like $5 or something, like $3 I think was the low. It went through the accumulation phase, so you can see this big accumulation that happened, popped up higher, now has gone higher and higher. You can understand this has happened with companies like Palantir, Affirm, Disney I think is going through it right now as well. We've come up to these tops. Now let's double check real quick. I would say Carvana does not show an exact selling or buying climax. So there is still a possibility that this might go a bit higher. Usually Max would do the expectations for earnings. Earnings do come up at the end of the month, so we still have a few more weeks for it. I would definitely say the expectation, you don't necessarily even have to play the earnings for Carvana. I would just say due to what Stacks is showing right now, I would not be surprised to see it break that 364 and just head higher from where it's at this point. That's the all-time high for it is 376. So if it can break back above this line right here, which was one of the resistances before it dropped back down, if it can break that, I would definitely see it very likely try to test that all-time high. Company seems to be doing quite well too. Net margin's fairly small, but certain technicals show it as a strong buy overall. So it's definitely it's done crazy year to date. And since here's just a measure, you can see from that bottom where it was to where it's at now, that's ridiculous. 14,000% return from the bottom of accumulation to the top. So, you know, one of the things, and what we like to do as well is whenever I do notice these Wyckoff accumulation situations, I try to share it with you guys so that you guys, if you guys are able to purchase shares for your long-term account or buy leaps in certain situations where leaps are good enough to, you know, aim for when it breaks out from those lows, buy a few years out. In this situation, imagine if you had purchased, let's just say the $40 calls for, you know, when it was trading down at $4 calls for 2 years out, man, you're looking and sitting pretty at this point. So don't knock what Wyckoff said. If you're not familiar with Wyckoff, Richard Wyckoff was what I like to think of as the Robin Hood of the stock market. He was a student of the stock market, worked in Wall Street, and basically noticed how the people were getting taken advantage of by the smart money interests. And what he did was he studied how these charts looked and studied what would happen, and also kind of correlated it with what news would do. So for example, he would say that when prices dropped, there was always this campaign being made where they would tell people, hey, you know, this company's, you know, doomed, you know, this company is you know, going to crap. And then they would also they would buy at these lower prices and then collectively push it up higher and higher and higher. There's also as well, when it hits the top as around here, there would also be good news about how things are headed higher. So, you know, just like Warren Buffett said, be greedy when others are fearful, be fearful when others are greedy. There are certain social indicators you can expect. So for example, if your grandmother or the people that are the least in the know are talking about something, so for example, you know, if you have people at the grocery store talking to you about Bitcoin, that's a signal that you might want to start looking to sell. When nobody's talking about it, everybody's fearful, everybody's worried about it, that's actually a signal and a time to buy. And the hardest part about the stock market and options as well is understanding that it goes completely against human psychology, because we're social animals. We need other people's approval and other people's input to gauge what's going on. And a lot of times with what the markets are going to have you do is exactly the opposite of what everybody's saying. So keep that in mind, okay, you guys? All right. Let me answer a few questions real quick. Jenny asks, is the IV still relevant for older purchases from a few days ago in stacks? Do those get updated? So whenever you see the IV in stacks, that is what was purchased at that time, okay? So for example, Carvana here, the IV 57%, that's locked in here, okay? That's what happened at 9:30 a.m. today. Now what you can go do is you can go pull up that specific ticker, pull up exactly what's going on with that specific that option contract, and you can see what the IV is trading at as time goes on. The other thing you want to also look for as well is, so for example, we got to keep an eye on the open interest for tomorrow, because this gets updated, and if these were all truly buys, these numbers should get added into the open interest, because those are open contracts that have not been closed out at this point. Okay, so keep that in mind. ENPH. Definitely a bit more bullish in terms of what we see, especially the last few weeks. Definitely more bullish. Spot prices fluctuating around that $40 to $41 range. Let's take a look as to... Energy. Ooh, okay. So what do you guys see here compared to what I just showed you on Carvana, right? You see this big distribution pattern. Now, I want to make sure that you guys notice this too. Something that sticks out to me in this distribution pattern is this big spike down here. It's kind of small for you guys, I understand. But there's a big spike in volume over here. In our distribution pattern, that's called our buying climax or buying climax in this situation. On the downward end, we would consider that a selling climax. So ENPH, I would love to see in a year or two if this turns out to be the selling climax, because you see a huge volume spike right here where it dropped to this $35 range. So there's a possibility that we're going to see a bit of accumulation come down and start to show up, and we might see that pattern exist in this range before it goes back up. Okay, this is a energy company, right? Electronic energy. One of the big things is a huge push for more efficient energy because of all the AI and chips. All of that is going to use a ton of computing energy. It's also going to need a bunch of cooling energy because you got to run AC and things like that to keep all those chips cool so they don't, fry themselves. So EMPH, I do think very likely we might have seen the worst of their earnings so far. I'll talk to Max and see maybe if he's available tomorrow. We will do some of the financial analysis on some of these names and some of these upcoming earnings. He was unable to make it today for our closing bell show. So very interesting to see. Keep in mind this could still go down a little bit further, but what you would want to look for is if there continues to be volume and buying in these lower ranges. Let me go back to Carvana just so you guys also see it too. Look at the volume spikes down here, guys. So yeah, we have the first sell-off and the first selling climax down here in this situation in our chart here. In our chart here, that's what the SC is over here, selling climax, and that's where you can see the first big spike. And every time it comes down to these lower ends in our Wyckoff accumulation, you should expect to see volume spikes, because what big money is doing is they are trying to accumulate as much as they possibly can. So look at our chart. Look at the volume spikes, volume spikes, volume spikes, all near the lower ends of it. And then when it pushes up past the range, you'll see a big spike as well. Big spike as well. So those are just things to keep an eye out for. And what ENPH is starting to show is that we're starting to see a possibility of that volume spike. And you can always go into a bigger time frame and you can see, compared to a lot of the other stuff, a lot of the other volume, this is one of the bigger ones. Could it still go lower? Yeah, we could still see further capitulation lower. But if you're playing the long term of this, this might be a good place to start buying a little bit and to continue to average into it as time goes on. Tiva. Yes, SOBA, the volume indicator is just the basic volume that is given from TradingView. So you can just go in here and just look up volume, and it's just the main one. Main one under technicals, I have it saved. That one I always have shown up. And then the other one, the VRVP, when I do show it gets a little bit messy on here, so I don't always have it up. But VRVP shows the volume on the right side as a profile, and that can also give you ideas of points of resistance and support for bigger picture situations. All right, let's also jump into that. So Tiva, so Tiva also pretty sure in the past I also showed this, went through a bit of an accumulation phase. At the top of an accumulation phase, what you have is you have a bit of chop around, and you have this as a last point of supply, the LPS. And it looks like in April we dropped back down to take up that last point supply. So there is over time a possibility this might head up further. On the daily, definitely on the lower end, the oversold side of things. Could we see this head up further? Earnings is coming up. They're positive in terms of annually they're still in a negative net margin. That's always something to consider. Last quarter was positive. So if that's the case, yeah, their financials are definitely a little bit rough. Analysts say to buy. Price target in a year says what, $24? Could I see it get there? I would say the Wyckoff pattern shows that it is headed up over time, and we have broken out of the lower range, so there is a very good possibility there. Let's take a look over at stacks though. Tiva, I've definitely traded a few times before. Most recently, more bullish, but the hard part is nothing has actually come up in it, in the last month. So keep an eye if you do notice prints come in, especially if you notice, for example, there's this Tiva print from down here. This is actually a Stacks AI Tiva print, and it went from $13.80, and at this point it's already trading at 17, and it went higher before that as well. So when I see smaller names like that show up under Stacks AI, definitely intrigues me, especially if you can get into these at a cheaper price. This one traded at $1.49. So, keep an eye out for that. I would just say for Tiva, keep an eye out for additional Stacks prints as we get closer to that date of earnings, if it does, whenever it is coming up, which would be end of this month. Let's go. Baba. Okay. I want to talk about Baba. Another Wyckoff accumulation type of pattern. And I've had this for quite some time. We did get into, earlier in January, we got into positions of it, saw the huge run up. There were some Stacks AI prints that saw about a 3,300% return. So 3,300% return on a Stacks AI print. The issue was, or two things is, first off, China continues to talk about how they're going to print more money. That's why we very recently just saw a little bump up as well. I think they said they're printing 700 billion to add into the markets, into their economy. We are currently, if I was to say, we are currently in this SOS, last point of supply and buy up range. You can see it's a bigger version of this, this wedge or triangle, you might imagine. So here, I always look at it as this little triangle, but it can be a bigger version of that. So we see that here, a bigger version of that. What we want to see with Baba right here is for it to break up above that downward slope. Will it happen? I think in due time it will. I've been expecting Baba to head up further, especially because, like I said, if you look back on a couple of my live streams from previous weeks, I've been talking about how China needs to start printing, and they did. Okay, they're probably going to continue to print more. It's going to come in waves, very likely, and then we can see this head up further. So, tariffs obviously going to affect it. We saw the big drop in April because of tariffs, but I think these are all overall buying opportunities for Alibaba just as a company. 275 billion market capitalization, PE price to earnings ratio is at a 15, so that's pretty solid. You have to understand, for example, those numbers can get pretty ridiculous. I keep on using this as an example. Palantir is trading at a 648 PE ratio. Okay. Quick lesson on that. I like to use a lemonade stand as an example. Let's say I opened up a lemonade stand on the corner of my street over here, sold lemonade, and let's say every year I make, for just a round number, $10,000 off selling lemonade. Okay. So a PE ratio is a good way to kind of get an idea of, okay, what is my company worth, right? And a lot of times with certain businesses, a very round number people use is multiply that earnings that you have per year, multiply it by 10. So if I make $10,000 off my business, I could try to maybe potentially sell it for 100K. So multiply that by 10. So that would give me a PE ratio of 10. Well, in this situation, when it comes down to stocks, that's the stock price. Okay, so in this situation, Palantir trading at $150 with a PE ratio of 648 means that 150 times 648, that's what the amount of money they're making, $150 times the number of stocks that they have, the valuation of their company at $356 billion means that they are valued at 648 times the amount of money they make per year. That's ridiculous. Okay. Yes, sometimes these PE ratios can get ridiculous. It's all due to forward expectations and forward guidance and forward growth. So the expectation is that Palantir is going to continue to make more and more money. And sometimes these numbers will get pretty ridiculous. NVIDIA at one point was pretty high up as well. But this PE ratio will go down if they start to report more and more in their earnings. Okay, so keep that in mind. In terms of their earnings, though, like, they make money, but they don't make, right? So their revenue right here, look at that. Last quarter, they made $883 million, but they're valued at $356 billion. So kind of an inconsistency in terms of just the fundamentals of numbers, but you have to realize that stocks and a lot of this, they say it doesn't have to make sense in terms of that, right? In the short run, they can stay, what was this, longer than you can stay solvent, right? I need to look that up real quick. The market can remain irrational longer than you can remain solvent. It's a famous quote attributed by John Keynes. Okay, so Keynes economics. So understand that here. Just a quick thing. I would say Palantir obviously is an exception, but what I'm trying to more so point out is that the PE ratio of 15 for a big company like Alibaba is something that I would say is worth a retirement portfolio type of purchase for the long run. Okay. And yeah, I would say Baba, if it's able to break up above that downward trend line, it could still come back down toward this 110 range, but I'm expecting that it would get purchased up and continue to buy up. Another thing you can see as well is these volume spikes down here. When it came down in April, it got bought up. So you can expect that there's more volume and more buyers in this range that are going to snatch it up if it ever drops down toward 100 anyway. So it's just an upward trajectory from there. And a lot of it has also to do with the fact that, yeah, it's at a 15.7 PE ratio. So it is a value buy in that situation. Okay, STT reported. Stock went down. Is it bullish for the next period? Well, two things. If you consider what I've taught you about volume, you see the big drop, and you do see it kind of getting snatched up. Earnings wasn't terrible. Earnings beat, right? But it very likely, I would say, is due to the fact that it ran up so fast, it needed a little bit of breather. Now you're saying that what? 1.85 million for September. 110. Yeah, I could see it head back up toward that. These are technically all-time highs for the company. State Street Finance. PE ratio at 11. Yeah, it's definitely, I would definitely say the expectation is probably for it to be bullish up through this next earnings. Let's see, STT. Yeah, I definitely would say this one might be worth taking a look at. As long as that OI is still high from later today, so check it out tomorrow. IV is fairly low. I would just say this might be a slow mover, so keep that in mind. Johan's question on MSTR MicroStrategy. We've talked about this before in a lot of previous streams. MicroStrategy definitely getting a lot of attention at this point, especially with Bitcoin making all-time highs. I think it hit like 123K most recently. It's kind of just fluctuated around those. A lot of that also has to do with, you know, are we going to lower interest rates? Is that coming soon? Are we opening up the money printer? Are we going to add more liquidity into our system? A lot of situations in those in that case is going to lead into the inflation of our asset prices, and Bitcoin, gold, silver, those are going to be a part of that. What else it's basically doing is we're devaluing the dollar, making the dollar worth less by adding more liquidity into our systems. So MicroStrategy, I would just be extremely careful with these. Look at these strike or the expiration dates for these. These are all for the end of the week. Okay. And another thing as well is they're buying quite a bit of it in the money. So in the money is a lot less risky, because the idea is that if it, you know, it creates kind of a floor, you might imagine, that if it goes down to those prices, you can still continue with that play, or continue by buying those actual stock options, right? The idea of a stock option is the fact that it's a contract that guarantees you the right to purchase those actual stock equity. So in the case that this hits expiration and the spot price is still above their strike, they can actually go purchase, this is basically like 40,000 stocks, or 40,000 shares of MicroStrategy at 435, and they can continue to profit off of it if it goes higher. So definitely very, fairly bullish in terms of it, but you also have to keep an eye on that IV and understand that it's basically riding on the price of Bitcoin at this point. Yes, ER is expected, and again, ER is expected with it, being focused upon the price of Bitcoin. If Bitcoin drops before their earnings, that's going to hurt it. So yeah, MicroStrategy. Oh, hey, look, another one of my drawings of it. What happened? We saw it go up, hit exactly where I drew where it was going to bounce down. Hasn't bounced as far down as I drew, but it's just fighting at that range at this point, fighting at this previous fair value gap. Okay, so can it go up higher? Yeah, definitely. This is still an estimate for when they're going to report earnings. It's not set yet. When you see that, it means it's an estimate for when they'll probably release the actual date in due time. But yeah, if our government starts printing money, I'm expecting this to go up. Okay, when it happens is the big question. DOCN. DigitalOcean Holdings. Packaged software, PE ratios 25. They're making money. That's good. IV's fairly low right now. 2.5 billion market capitalization. Just off of the chart, I think it should be headed up soon. It could still dip down below 25 a little bit. There is a little bit of a fair value gap back over here for it to maybe go toward. But if earnings continues to come out strong, they report at the beginning of August. So what do I see in this chart right here is, let me draw this out. You had low, even lower, okay? But we see little spikes here and there. Now, another thing that you should understand too is that when it goes down lower, does it head all the way down there? And when it does, what's the reaction of it? Look at how quickly in this situation, all right, it popped back up here. Here it popped back up even faster. Here it popped back up even quicker. Same with here. It's pretty high up there. Now it did drop, right? Drop back down. My expectation is right now they're trying to take up the last bit of liquidity in this range. And you see the big spike of volume on the side here too. So if it can get back up above this $30 range, you'll see it probably hit that 34, chop around it in this range before it makes a determination of what direction to go. But if the company continues to make its money, this did already go through, you know, like I said, what does this on the left look like? It looks like a huge distribution, right? Blow off top, capitulation back down, hits these moments of despair, hits these lows, $20 as the lows, comes back, but now it's going through a very likely accumulation phase where we might be looking at that last point of supply, like I've shown you guys. Okay, so DOCN, let's see what they look like in terms of what Stacks has to say. Not much activity. Very much not much activity. Maybe on the long, this is in for 2 years. Strike of $50. They're in the red right now. We're trading lower than that at this point. So go see if they're still possibly in these positions. But this is from 2024, so flow is tough to say here. That's what I would say. Flow's not giving us much to talk about. Yeah. But the chart itself, as long as the company continues to make money and continues to do well in terms of their bottom line, I can see it headed a little bit further up. Okay, last one, CNTA. If you guys have anything left you want to tell me and have me look over, let me know. Okay, CNTA, new one. You don't see too much of this. This would definitely be maybe, let's see if they have earnings coming up. All right, what does that look like, guys? Accumulation zone. Came back down. One thing to understand too is it continues to make higher lows. Peaked down a little bit during that April tariff tantrum, popped right back up. Respected this upward trend line pretty well. It's got to break through all this big volume up here, but it definitely has legs to potentially head back up. Earnings coming up in the middle, possibly in the middle of next month. The issue is that their estimate for earnings is negative. Okay. I don't love this due to the fact that their net margin is still negative. However, it is a possibility that the person that got into that position just today knows something about how maybe they might start reporting positive news or, you know, etc. So maybe what was the expiration for their position. 8:15. That is right when they're expected. No, that's right before they're expecting to report their earnings. So that's a little bit hard to tell. A little bit hard to tell there. If it was after the expectation of earnings, now keep in mind this is their earnings is estimated, so maybe they're going to report earnings a little bit early, and maybe they're going to give a report that is going to beat out expectations heavily. That would be the reason why I would see this. Health technology, is it possible that they're going to have some solution for, right now the idea is that, they talked about possible 200% tariffs on pharmaceuticals. There's cuts to Medicare and things like that, Medicaid. So is it possible that this company is going to get some sort of contract? Is it possible that something, with news is going to come up? I think that is a possibility with the unusual big money position that was taken here. Definitely something to kind of keep an eye out on over the course of the next few weeks. So we can revisit that. Yeah, I'm glad you brought that up. LLY. Yes, Eli Lilly. Back and forth. I know we saw some pretty unusual prints that came in. We saw a big drop due to the fact that there was the pharmaceutical possible 200% tariffs. It's respected it quite well. It popped right back up since it hit the lower end of this line right here. So you can imagine, that's something to consider. That's something, it's very possible we may start to see it head up a little bit further past that 800 range. But the hard part right now is you have to remember pharmaceutical tariffs are, in the scope, right? They're in the line of fire right now. If good news comes out for it, he ends up saying we're not going to tariff it, or it's going to be a very small number compared to this 200% they're talking about. If this was back when we first had tariffs being announced, people really believed that things were actually going to happen. Right now, there's what they call the taco trade, meaning Trump always chickens out, or the fact that he's going to come out with these huge numbers like he did with China, and he's going to backtrack on it, and he's going to come, use it for negotiations. It's going to scare everybody off. I think the markets at this point are starting to understand that's the technique, or at least, the going on. So, the drop, a lot of times, like, what I've noticed is more so whatever fear that is being put into the markets are a lot of times right now going to be buying opportunities. So, for example, Eli Lilly dropping down to the 676 during the April tariffs, went back up as high as 900 over here. So buying opportunities when everybody else is fearful. That's the hard part about what's going on right now with this administration is a single tweet can move the needle in either direction very quickly, and then a backtrack upon that tweet very quickly can change it up as well. So those are things I want you guys to keep in mind for. Hope I went through everything. If I missed one of your comments, go ahead and comment in here for me, guys, so I can get to it. Well, I wanted to go over and talk a little bit about what's in our Discord chat. I don't know, for whatever reason on my end, it's not exactly working for me right now. As soon as it starts working, I will put together a video for you guys so you guys can understand what channels are meant for. I had a friend that is using Stacks, and he talks about how he didn't even realize that TG Trades was Max and that he's doing live streams basically every day. A lot of information, a lot of things that you guys can use when it comes down to it. This was working just earlier today. The client that we use might be having some issues right now, but I'll refresh it later, and then if I have a moment, I will record a video for you guys talking about what what resources we have in those channels for you guys. Last thing I want to go over with you guys here. Let me pull this up here. Our back testing. Let's do that. Okay. Had a lot of people that are a little bit unsure how to use and how to understand what's going on in our back tests. If you haven't already, I post these every single month. Sometimes multiple ones in a month, depending on what kind of updates we have. But Stacks AI goes through and it picks out the most unusual prints and the most eye-opening types of moments and situations. So in a lot of these, they're making very big bets in terms of price moving in a certain direction, and it's so unusual that gets put onto our radar. Overall, we have a very high hit rate. But I want to, one of the things that we've always wanted to do when it comes down to our software and when it comes down to how we share our information is we want to be as transparent as we can. And as the guy that does all of these for you guys, I want to make sure that you guys not only see the numbers, but understand them, because I understand if I was given all this information at once, it's very hard to see and understand what exactly is going on. So let me go ahead. I'm going to make my face a little smaller so you guys can see a little more. Okay, so let's discuss this. From the very beginning here, we have some additional details that are used. So the volume, the open interest, the IV rank, and things like that. And over time, what Stacks has allowed us to do is it's actually helped us pick out what's more useful. So for example, IV, just like I've told you guys, when IV is high, it increases your risk profile. So we've started to, it shouts out some of the lower IV situations, which oftentimes show us when they're getting into positions earlier than the news is about to hit, earlier before earnings is about to hit. The premium, one of the things I most recently did is some of these boxes I used to have to go through and color code them individually. I found a way to do conditional formatting. So anything over $5 million in premium gets highlighted. Anything over, let me double check real quick. Anything over 10,000 is in the bright green. Anything between 5 and 10,000 is in the light green. Okay. I also have a quick little spark line. What it does is it gives me, the left one is a quick way for me to gauge from my back testing if there's additional gains that I can update on. So for example, this one, LEU, shows that from when I updated it here on the 20th, it's technically gone up higher. So I can actually go ahead and update this one for you guys right now. Now it's trading at 80 and 10 cents, which is higher than here. So for example, I'm going to go in, I'm going to update it for you guys right now. 80.10, update that for today. And I can actually still go in here and double check. Okay, yep, that is the high for today. There was volume, 17 of them traded today. So that is the new high for that. Okay. And what it does is, so for example, this, because it was updated today, there's no longer going to be a updated spark line on the left. The Google Finance spark line shows from when they entered. So this date over here shows when they entered on that Stacks AI print, and then it gives me all the way up till today. Okay, so you can see LEU has gone up. You can see Riot here has gone up. PDD's gone up, but then came back down. Meta is down from where they entered. Just a quick little thing. ARKK here is up quite a bit. We probably can update that one really quick here too. 650. So there we go. 650. I can update that for today. Now, I'll do additional updating and all that for you guys later on. So you can see, for example, this ARKK position is looking at a 261% return. July 2025 code expired. If you want to, Kay, go ahead and email us at help@investorcentralclub.com. Let me know. That way we get your email, and what we can do is we can set you up with that July 2025 code. Keep in mind it is for the annual subscription. It doesn't work for the monthly subscription, so just in case that's what you're looking at. All right, back to this. So, okay, ticker, you guys understand. Buy side, the majority of what we have are generally going to be call positions. Every once in a while, we'll see a put here and there. The expiration and the strike that they got into, the option price and what they purchased the option at, and whether or not it's considered a win due to the highs that, like you saw me just go into and double check. The percentage return from those options, and then the date of those highs. On the right side, we also have the number of days to the high. And one thing you'll notice is anything under 2 days gets this gray mark, because generally what happens is that, for example, you can use Meta here as an example. We see a little pop the day after. And yes, while this one went from $14 up to $15, it's only a 9% change. Now, one of the things we did for our more recent back tests is you'll notice that even though these are technically wins, these are above 0%, which is a win. You know, you made money off of that position. The fact that they're only at about under 15%, we gray them out. We do not count them at this point. Okay. Another thing too is on the left here. The left side spot is what the stock was trading at the moment they got into that specific position. And Google Finance helps me pull up those exact prices as of today. So anytime you see this, this is what it's trading at as of July the 16th. And the spot change, so it will be in green. Let me double check real quick. My conditional formatting. So if it's between 0 to 10%, it's in light green. If it's over 10%, in terms of the equity, it's going to get in the bright green, and same with the red as well. So the red, light red, is between negative percentages up to negative 10%, okay, or down to negative 10%. So it just gives an idea, and it's also pretty, like, for example, if you purchased LEU when they got in last month at 149, you're up 52% when it comes down to the equity. So, you know, a lot of times with these, you just got to understand, figure out your risk profile. Sometimes some of these, for example, this option would have cost you 2.8K for each one of those options. Maybe it would be more advantageous for you to just get into the actual equity and to play that on the upside. Yeah, you're not going to get the 181% return on that, but you will still get the 52% return off of the equity, which is going to be a bit safer. So yes, if you guys understand, the reason why it says days to high and it's in gray just basically means that it did go higher, but it went higher just that day after, and then it's basically very likely gone down from there and maybe struggled from there and on. You also have to realize too, and this is something that, you know, there are a few of our members that have certain strategies set up where, for example, they're going to take profits at a certain level. For example, DM2 Trades is Dylan. He's set it up where anytime a Stacks AI print comes up, he'll get into, and he'll set his sells for a 40% return. Just set it and take it and leave it when it does happen. And for example, certain months that may have worked out really, really well. So for example, this is April over here, where April, we only had one miss, which is Alibaba. Everything else ranged from 48% up to 1,000% here. But you have to realize his strategy is to take the 40% and run and move it to the next position as soon as he can to continue churning and playing the compound game of his portfolio. Now, you know, I want you guys to understand too, you know, these are averages in terms of the average month's hit rate. So for example, the average the average return. So for example, the month of June now has just under 100% average percentage return. But you have to remember certain risks that come up is, for example, if you didn't get into this ARK position, or you maybe got scared out of that ARK position early, you're not going to see that 261%. And another thing as well is, what if it moved like this FSLR one here, where it's only at 19%? So some of them are going to be slower movers. Some of them are obviously going to move fairly quickly. For example, we had a BAVA print that came in yesterday or the day before. The day after, it popped up 70% right away. Okay. Now, my reminder to you guys is one of the good strategies to consider is to make sure that you can get into more than just one of these options. I know some people go in and they just buy one of these options. Spend $150 here, $180 here. Now the thing is though that it doesn't really give you much wiggle room. For example, if you purchased one of these LEU contracts, if it did drop, or if it did go down to 10, 20, 30%, there's a good chance that you might look at it and you want to get yourself out, and then you never get and make money off of when it does finally pop in due time. So my suggestion, make sure you can buy multiple contracts. Have a little bit of wiggle room to average down if you do need to. But if you do see high percentages, or you're aiming for those high percentages, start to take some of it off the table as you hit certain levels. So maybe when you hit 50% return on it, you take off half of your position, or even a little bit more. Take off enough so that you maintain what you went in with, and then let the runners go for these higher percentages as well. Okay. We've got some great numbers to share with you guys. And as you can see, we've been doing this for many, many months here. Since the middle of 2023, we did not release stacks until December. So there are a few months of these that technically, you guys did not have the potential access to, but we still use it for our back testing because we wanted to make sure stacks was running smoothly back then. Out of our 386 prints through June, that's a 91% hit rate, right? But you all want to keep in mind too, if you went all in on one of those positions that wasn't part of the 91%, you could still blow your account. So you have to be careful with your risk profile and realize that while these numbers are very enticing, these numbers are very, very alluring, 232% average return across all of those prints, you have to understand that those are how percentages and how averages work. Okay, so we do have some of these prints in here, and you'll notice all this dark green over here where they purchased back at the end of 2023, and some of these went extremely high. Some of these had over 1,000% return, over 1,000% return, over 500% return, and those averages are going to pull up some of these lower numbers and some of these lower percentage returns. That's just how averages work, right? So understand that you still have to play your risk management, and if you're able to get half to 2/3 of these highs, you're gonna be fairly green. But nobody's gonna be able to time these highs exactly. You have no idea that this one's gonna hit this percentage return. Yes, VST here hit a 2,400% return, but where are you planning to sell? Where are you planning to take your profits off of it, and learning not to be too greedy with those positions? Because there is a possibility that, yeah, maybe it went high, but then it's going to drop from there. And maybe the high for it is only going to be 50% or 11 or 12%. So you have to play that strategy and understand, we've put this back testing as a guide to help you guys understand what is possible. But you still have to make sure that you manage your portfolio to avoid the extreme risks that may come with staying in a position for too long. Okay. Now, things I will point out, whenever we do see leaps, whenever we see, okay, they're purchasing, like right now, if they're purchasing for 2027, this meta contract that they're in, you've got the luxury of waiting around a little bit longer for it. Obviously, it's going to be a little bit more expensive of a contract to consider. But when you look back on 2024, so for example, February of 2024, a lot of these over here did actually take 200 plus days for them to hit those highs. So that's something to consider. And yes, every now and then you're going to have one that hits its high after 2 days and it just drops afterwards. So again, be careful with those, with your strategy. Be careful with your risk management as not to put yourself in those type of risky situations. Okay. Overall, I've already posted this. This is on Instagram, on X. It's on our Discord. Our overall hit rates, our average returns. You'll see our average returns have jumped up quite a bit from when we began, because again, you have to let some of these marinate, let some of these take some time to grow. But our hit rates overall have been fairly steady in that 90% range overall. And again, there are certain months where, if you look on our previous back tests, where there's certain months where the average hit rate, the hit rate for certain months, especially the newer months, tends to be a bit lower. So for example, 75% for that December here. This one over here for May, 78% hit rate. But what we do somewhat expect is over time for some of these to go higher. Oh, let's look at this one. MicroStrategy here is going to change into a win very likely. 33.5. Nope. All right. So here's another one of the risks. One of the risks is that it takes too long for something to come back up, and it's going to end up losing out from it. So for example here, volume 380, and it took too long for MicroStrategy is in this situation, they got in when it was 400, it's 455 now. So it definitely went up. It's up 14% from their entry. But this option has lost out simply because the time decay ate away at it too much. And it's aiming for 490, so it hasn't quite gone in the money just yet. Okay. For Stacks AI, especially if you guys do have questions, please don't hesitate. If you also, again, Kay, if you're still around there, let us know about your July 2025 code. Email us so we can get back to you on that. If you guys have any questions on our Stacks backtesting, if you have any questions about our software, anything that you need us to answer, go ahead and send us an email, help@investorcentralclub.com. We're always happy to help you guys out there. Those of you that maybe have missed it, 25% off our annual subscription, July 2025. Use that. Get your subscription for Stacks for the year. Join the community. Let us know if you have questions, and again, participate with us so that we can help you guys out there. I know today's went a little bit long. I will try to get Max in on this soon so that he can go over the earnings expectations and those numbers for you guys too. But yeah, we did a solid 2 hours today for live. Hope that was useful for you guys. If you guys are joining us late on this too as well, please go ahead, hit that like button, hit subscribe, hit the bell button, the notification button, so that the next time that we go live, you guys can join in and have a conversation with us. All right. That being said, you guys have a great rest of your day, great rest of your week. We'll jump back into some more earnings, especially next week. Max and I will do a full earnings preview of everything else next time when he's available, and we'll get to it. Have a great one, you guys. Talk to you guys later.